If you invest in ETFs, you probably heard about Vanguard, the second largest asset management firm in the world with $7.6 trillion under management. And most of my index funds are with Vanguard, not only because they have low management fees, but also Vanguard's unique investment approach you probably are not aware of. In this video, I want to share some of the unknown and eye-opening facts about Vanguard Group, and this might change how you view their investment products from now on. Most of us got to know Vanguard either from a famous investing forum Bogle has, or from its founder John Bogle or Jack Bogle's book, The Little Book of Common Sense Investing. There are many great investors worldwide, but no one has done as much as John Bogle did for everyday investors by making passive index investing accessible to the public, especially to the FI community. However, Bogle's early investing career was devoted to active fund management. After graduating from Princeton with distinction marks in 1951, Bogle was soon hired by Walter Morgan, founder of the Wellington Funds, reportedly as a result of Morgan reading his 130-page thesis paper, The Economic Role of the Investment Company. After successfully climbing through the ranks, Bogle replaced Morgan as chairman of Wellington's mutual funds in 1970, but was later fired for an extremely unwise merger that he had approved. It was a poor decision that he later considered his biggest career mistake.
And that was the iVest fund up in Boston. The iVest fund and the other funds they started, all very aggressive, did really, really well until they didn't. And in the 50% market decline of 1970, late 1972 to 1974 October, 50% down, their funds probably went down, say 65%. The go-go era was dead. The company was falling apart, and because of their terrible performance, and they ganged up and fired me. Nobody seemed very interested in me. The head of the Pennsylvania company looked at me and said, "What do we need you for?" This is a lesson in humility here.
In hindsight, this was the bad thing that ever happened to everyday investors because there wouldn't be Vanguard if Bogle was still working for Wellington Funds. In 1974, Bogle founded Vanguard Group. 1 year later, he created the first index investment trust, which was a precursor to the Vanguard 500 index fund for the general public on December 31st, 1975.
It would be a better way to run a fund business, and persuaded the directors of the Wellington Fund and the Windsor Fund and the other funds to start a new structure in which the funds were in the driver's seat and not the management company.
Although Bogle is often considered the father of index fund investing, however, did you know this was not the first index fund ever created? The very first two index funds, Standard & Poor's Composite Index Funds, were established by John McCoy and David Booth from Wells Fargo and Rex Sinquefied from American National Bank in 1973. The only difference between these two index funds with Vanguard's first index trust was these two funds were established for institutional clients. Individual investors were excluded. When starting the first index investment trust in 1975, competitors heavily derided it as being un-American, and they called the fund Bogle's Folly. Fidelity Investments chairman Edward Johnson was quoted as saying that he couldn't believe that the great mass of investors are going to be satisfied with receiving just average returns. Despite the criticisms, Vanguard made $70 million in the first 5 years, and Bogle's fund was later renamed Vanguard 500 Index Fund, which tracks the Standard & Poor's 500 index. Bogle predicted in January 1992 that it would very likely surpass the Star Active Managed Fund, the Fidelity Magellan Fund, before 2001, which it did in April 2000. And by the way, this Fidelity Magellan Fund was the single largest mutual fund in the world for quite some time, managed by legendary fund manager Peter Lynch from 1977 to 1990 with a 29% annual return until when Vanguard's S&P 500 index fund took its place. Bogle argued for an approach to investing defined by simplicity and common sense, such as select low-cost funds, buy your fund portfolio and hold it, stay the course, and don't overrate the past performance, just to name a few. And Bogle made investing cheaper, simpler, and more accessible than ever before, lifting the financial well-being of millions of people in the process. The most remarkable thing about him is that he created billions or perhaps trillions of dollars in value. Bogle's net worth by the time of his passing in 2019 was only estimated at $80 million, a laughably small sum for the founder of one of the world's biggest financial institutions.
That's what capitalism is, the incentive to get rich, if you will. And, I'm doing fine, but I don't own Vanguard. I've never owned a share of Vanguard. But I've been paid a nice salary and a decent salary and nice bonus when I was running the place. So I'm not complaining, but I just don't have and never will have the kind of wealth that most people in this business have gotten because they charged their investors too much for what they're worth.
If we think about it, by 2019, Vanguard's global asset management reached $6 trillion, which is about 30% of the total US GDP in the same year. We can compare that with other fund management firms. Larry Fink, CEO of BlackRock, had a net worth of $1 billion. Abigail Johnson, CEO of Fidelity Investments, had a net worth of $15.6 billion, even though Fidelity was half the size of Vanguard's based on assets under management. Steven Schwarzman, co-founder of private equity firm Blackstone Group, had a net worth of $13.2 billion with $571 billion assets under management. If Bogle were anyone else, he'd be a billionaire. Where did Bogle's money go? Now we have to talk about the unique company structure of Vanguard he set up in the first place. While many financial institutions are for-profit corporations, and Vanguard is unique because it's structured as a mutual company from day one by John Bogle. What does that mean? Since Vanguard is not a publicly traded company, it doesn't have outside shareholders to please with hefty profits. In other words, if you own shares of Vanguard funds, you are the actual owners of the company.
New investment management company owned by the fund shareholders. This makes us the first mutual fund. We use this name mutual funds, it's totally false, except for Vanguard.
BlackRock, with its popular iShares ETFs, is a public company. Their best interests are with the investors who own their stock. State Street Corporations, with its famous SPDR ETFs, is a publicly traded company as well. Their priority is not you, but their shareholders. Same with Charles Schwab, which is a public company. The incentive aligns with the investors who own their stock. The mutual fund giant Fidelity Investments is a private company which was founded by Edward Johnson. The Johnson family owns 49% of the company. The remaining 51% of the company is held by various Fidelity employees and ex-employees. If you own one of their funds, sorry, they probably are not looking out for you. One of the popular fund managers in Australia, BetaShares, with its diverse thematic ETFs, is owned by a US private equity firm, TA Associates. They're going to look after their general partner and limited partners, not you. In Vanguard, we are the company's owners, and this structure aligns with the best interests of the investors who own the Vanguard funds, leading to lower fees and an emphasis on delivering value to us. Vanguard was known for his index mutual fund, but the first ETF was not created by them. In his little book of common sense investing, Bogle said in 1992, the pioneer of the first ETF, Nathan Most, approached him with an offer to design the first exchange-traded fund based on Vanguard 500 index fund. However, Bogle turned down the offer in a decision that paved the way for the arrival of State Street Global Advisors headline SPDR S&P 500 ETF, SPY, in 1993. Bogle didn't like the concept because traders moving in and out of the funds would drive up costs. He later explained why he declined the offer. Since I see trading as a loser's game for investors and a winner's game for brokers, I declined his offer, but we parted friends. It took another 8 years after SPY's arrival. Vanguard launched the now $323 billion Vanguard Total Stock Market ETF VTI as a share class of its global equity mutual fund. After comparing ETFs to a wolf in a sheep's clothing, Bogle said there's nothing wrong with investing in those index ETFs that track the broad stock market, just so long as you do not trade them. The reluctance to launch an index ETF just because it doesn't chime with the firm's mantra of disciplined, long-term investing shows again how much Vanguard puts its investors first.
Here at Vanguard is putting the investor first and innovating for the investor and not for ourselves, and trying to keep costs as low as we can, which is rock bottom. That's been the idea from the very beginning of Vanguard, because a mutual company doesn't have a private owner out there, or a public owner. And so we have no one to serve but the shareholder.
When it comes to selecting a fund manager, it's either Vanguard, BlackRock, State Street, Global X, VanEck, or Russell Investments in Australia. I tend to consider the following factors before looking at the actual investment products. Does the fund manager have a sustainable business model that ensures the company will be around over the long term? And small firms would need a founding equity party to guarantee the working capital over a period of time. Established firms with big stake of ownership by institutional investors have the risk of jeopardizing the cash flow of the company when large redemptions happen. And Vanguard isn't owned by shareholders, it's owned by the people who invest in their funds. And this allows them to focus on the long term rather than quarterly results. And thus the company put investors first by offering low cost and transparent products. Unlike some actively managed funds that have high turnover, Vanguard tends to hold investments for the long haul, and this approach not only reduces transaction and tax costs, but also aligns with the philosophy of patient, strategic investing. The company had consistently lobbied for investor-friendly regulations and fee reductions across the industry, and the entire fund industry had been forced to lower fees in response, saving investors billions of dollars. There are many ways to invest in Vanguard managed funds or ETFs in Australia. You can invest in Vanguard funds, in Vanguard Personal Investor, which was launched in April 2020, or any other online brokers like CMC Market, Pearler, and Stake, which all offer sponsored shares. If you're not sure where to start, you can watch this video where I compare different online brokers. Personally, most of my core index funds are with Vanguard, not only because the management fees are low, but also I have tremendous respect for the mutual company structure that Bogle purposely set up back in 1975. Yes, founders, entrepreneurs, and corporate leaders deserve to be rewarded financially for their contributions. Few of them tend to worry about the growing wealth disparity between the wealthy and the average individuals. And Bogle's spread the wealth philosophy is laid out in his remarkable book, Enough: True Measures of Money, Business, and Life. During his investment career, he had seen how destructive an obsession with financial success could be, and this book puts this dilemma in perspective. Later in his life, Bogle expressed concerns that the growing popularity of passive indexing would lead to a concentration of corporate voting power for leaders of the three largest investment firms, Vanguard, BlackRock, and State Street, adding, "I do not believe that such a concentration would serve the national interest." He was one of the great wealth masters in the world that was not only advocating spreading the wealth, but also living by it. What a legend. Besides the normal Vanguard managed funds and ETFs, Vanguard has its Kids account and Super account in Australia as well. You can check them out if you would like to know more information. My name is Irene. I'll see you next week. Bye.